Talking about the trading day for today. I'm recording this on June 16th, 2023. And so let's talk about what's going on in the market. So in the previous video I did yesterday, I talked about the Federal Reserve and how they were doing their pause and how it may affect markets. Now, how the equity market is moving towards a very bullish situation. Now, if you listen to some of the pundits on the news networks, and especially Bloomberg and CNBC, maybe even Fox Business, you'll start hearing, well, maybe we're going to go into a recession and all this. The bottom line is that I think that the Federal Reserve is going to maybe do one more rate hike, but they are not going to reverse their rate hikes and do cutting this year at all. And it's very possible that they don't even do it in 2024. The reverse probably will take place in 2025. This epoch of the bearish market, going all the way back to September, October of last year is when it kind of started. Most people, even myself, at that time were thinking, okay, we were going to go into a bearish market and we would actually see a recession. That did not take place, even as the Federal Reserve was raising rates. Yes, certain sectors may have, some, unique issues. For example, tech. During this bear market, that we're now going into a bullish market, but during the bear market, the recent bear market, we had a lot of tech jobs that were lost, right? But then all of a sudden, the AI news starts to come out with ChatGPT and generative AI. I should do another video about AI because I did some postdoctoral stuff on AI that was tied to my dissertation. But the bottom line here is that AI is running the story for tech, and so a lot of money flew into that. That's the next big investment. The gains in AI, the big gains in AI, we're not gonna see much of. They just integrated Bing with kind of like a search, like Bing Chat. What is it called? Chat. I think Microsoft calls it Bing GPT or something like that. So that's integrated already in the search engine. And if you play around with it, what you will notice with this kind of AI, the generative AI and this GPT type AI, it's really searching the internet for answers very quickly. So if someone was doing some research, right, before this GPT thing, you would have to go to multiple sites, multiple sources, copy paste, do a citation thing. So this Bing GPT is just a very quick way to do that. Some of it may not be accurate. What is unique as we're moving forward is in the arts and in marketing, where they can generate pictures or generate videos, based on some sort of data set. There was a recent article that took place that was interesting, and it shows the bias actually of AI, where they took 10 universities and what the AI thought a male or female that was going to those universities looked like. It's interesting to see. Maybe some people have seen this article, but AI is in its infancy stage in terms of adding efficiency to corporations. There's a big flood of money flowing in, and that's what reversed the lost jobs in tech during this bear market. So that's kind of a unique situation. Other markets haven't seen a whole lot of job losses. Therefore, we still have an unemployment rate below the natural unemployment rate. Now, in standard economic models, the natural unemployment rate is about 5%. So if you're over 5%, then you have too many people that are unemployed. If you're below 5%, you are running a hot economy, especially when you couple that with inflation. So the Federal Reserve was trying to raise rates to fight this issue. I still hold, even though this is maybe an old economic model, but the idea that 5% is roughly your natural unemployment rate. Maybe because of technology and more goods and services, maybe that needs to be changed, but that standard rate of 5% as the natural unemployment rate has been around for a long time, and that's kind of the doctrine, right? So so a lot of money is flowing in, and people are saying, oh, there's going to be a recession. There was going to be a recession going all the way back to September or October of last year, that it was coming. It's coming. So the bottom line is it hasn't happened. And inflation still is a problem, but it's less of a problem as time goes on. If oil goes past 80, then that's going to be additional inflationary pressures, and what we'll see is a Federal Reserve that will continue to tighten. But if oil stays within that 73 to 65 range, which I suspect, then we're probably going to see a very bullish situation in equities. I had a substantial amount of cash on hand, waiting for the big fall, which never really happened. It was just kind of a slow fall. And there's a turn up there's a kind of a mean reversion that's taking place, and that started around October of last year. I'm sorry, when I said that the bear market started in around late 2022. I'm sorry, late 2021. Starts around 2022. So for about for a full year, you had kind of like this downward, but there was volatility. The bottom line here is that we're starting to mean revert up on the S&P 500, and that is September of last year is when that starts. Okay, so with that, it broke a very important resistance point, which is the 23% retracement on the 2015 Fibonacci and the 2019 Fibonacci. Why are those two important? Well, we had the crash because of the crisis, the pandemic, and then in 2015 there was a large correction that took place. So those two things really are important. They kind of overlay. But we broke that resistance point, and because we broke that resistance point, it's going to be bullish. So what I did over time, I've been trickling in money into the S&P 500 in the passive portfolio. Well, once it broke the resistance level, I'm all in now, all right, in cash. Cash moved all the way into the S&P 500. So on my passive portfolio, I am 100% in on that. Now there's an active part of the portfolio that's in and out of things all the time. All right. So I want to go over the market as of, it's almost 10 o'clock. VIX is low. That's very bullish for equities. It's running at around 14.4. It's going to be like that for a while, Usually what happens every 2 to 3 months, there's a spike and then it comes back down. So it's heteroscedastic is what it's called. So there's an asymmetry that's going on in the volatility market. So we're going to be in a non-volatile market for a little bit. that means that the equities are going to continue to go up, and we are going to test the high of S&P 500 this year. All right, it's probably going to test it and then fight it and then come back down and then, you know, come and then burst past. That's why we're probably going to see the highest S&P 500 that we've ever seen this year. Now, the oil is trading at 70.7. So that's WTI. Now, that again is in that range that I said. It's about 73 to 65 is kind of like the Goldilocks trading range to prevent energy inflationary pressure. All right, so as long as it's below 73, we're probably going to be okay in terms of inflationary pressure. Now, I want to take a look at my other indicator, which is the currency market for yen. Now that's trading at 141. Now remember what I said, that when you look at the USD yen trade, if the yen is weakening, that is usually a sign of risk taking. That coincides with what we're seeing in the energy market, that coincides with the VIX, and that coincides with the S&P 500 futures market. So what we have here is another bullish signal. If the yen starts to strengthen and you start seeing the VIX start to increase in volatility, then you're talking about you know, a little bit more volatility in the S&P 500. It's not going to be smooth sailing in the S&P 500 and equities, but what we'll have is this kind of wall of worries, you know, kind of climb. I believe that we're out of the bearish market and we're in the new bull market. Now, how am I playing it in the active trading portfolio? All right, so what I do, I primarily am a macro trader. I don't look at micro stuff like an individual stock. The reason being is that it has an idiosyncratic risk on top of systemic risk. Systemic risk is what's the overall risk in the market. Idiosyncratic risk is additional risk because of that particular company, right? It's too volatile. That's people can do it, but I'm more macro. I commodities or indexes or ETFs and stuff like that. So I'm looking at the oil market right now. I closed my active positions in my straddle for the S&P 500 leverage. So made money on that. Right now I have, I'm more heavy on my positions for shorting the oil market than my positions on longing the oil market. So it's not a 100% straddle. It's a little bit heavier on the short side of it. So, you know, it's been bouncing back and forth, but that's where I'm at right now. So I have positions in DRIP, and I have positions in USO, and what else? What was it? And SCO. So that's how I'm playing it right now. But I suspect when we're looking at this, you know, 3 months, 6 months out, in 3 months we're going to have a little bit of a spike in volatility. But this thing, I think that the flow of funds, because of the resistance barrier, has been broken, and that resistance barrier was around 420 for the SPY ETF. That the algorithmic traders and the institutional investors are taking their cash on hand and deploying it. And there's going to be a big surge in the equity market. That doesn't mean that every day is going to be an update. It's not going to be an update. Actually, I think this is the 7th possible day that we're going to have an up day in the market. So there's going to be some down days. But when you look at the average trend line, this is going to test the overall high of the S&P 500 this year. Now, that was about 479, almost 480 on SPY. So that's my take on the market. Hopefully you learned something about how I view this market. Yes, probably people will have questions on specific on specific companies, but I don't really look at specific companies. I'm looking at the overall trend of the market. I'm more of a macro guy than a micro guy. Now I'm just looking at the chat here. Now someone states that the rate hikes will continue until 2025. There's a few different arguments here, and I guess it kind of depends on one's standpoint. There's definitely a pause in the United States, and there is word on the street that the ECB is going to raise rates. Well, when one central bank raises rates and another doesn't, then there's kind of a discoherence in monetary policy. And that may be one element that drives, if the ECB continues to raise rates, that drives the Federal Reserve to also have to raise rates to maintain coherence in monetary policy and in currency rates. So that's one driver. It depends on what the other banks are doing, like the ECB and the Bank of England, the BOE. My understanding is the BOJ wasn't going to raise rates. I haven't been following the BOJ that much, but maybe they have. I don't think they have raised rates. So it's really what's going to be happening with the Bank of England and the European Central Bank. So that's one element to it. The other is, do we see inflationary pressure with oil? If we don't see inflationary pressure with oil, it lowers the probability of seeing more rates into 2025. I think that we're going to see one more, possibly even two more rate hikes in the United States. But I think that what's happening here is that we're seeing the tail end of this process, and that it's a very bullish sign. Again, you can look at the markets in a very economic model with a lot of theory, but markets are very behavioral. I think behavioral finance models markets better than overall old style economic fundamentals. So because of that, the behavior of that Fibonacci and breaking that resistance point is really, really bullish sign. So we could still have an overall trend in the equity market, even with increased rate hikes, because the equity market is always pricing in future earnings, right? So we're dealing with in the future. We're not dealing in the present, even though we look at spot price as a present situation, but it's really baked in future earnings, right? It's all net present value kind of stuff. Based on what's going to be happening in the future. So, but I do think that are we done with rate hikes this year? Probably not. We'll probably see one or two more this year. But again, the only way that they're going to be doing a reduction in rates would be if we see a material deterioration of the economy, which I don't think is going to happen. I think this is something very similar to what was going on during the productivity gains that were happening under Greenspan during the I think it was the Clinton administration, where the Federal Reserve was starting to lose. I read the memoirs from Greenspan, and Greenspan was talking about how when computers and tech was just kind of coming on board and really providing productivity in the business world. And their old models to try to define productivity in the United States was more of an old manufacturing model, and it wasn't tied with tech. Now, what Greenspan was famous on, even though he used econometrics for policy, he had a very large consulting company, and had a lot of different contacts before he went into the Federal Reserve. So he would just get on the phone and talk to his contacts. So he kind of did, some kind of like a personalized survey of all these contacts that he had from his consulting days before he went to the Federal Reserve as chairman. And he was able to get a pulse of what was going on, and he eventually had his team of economists be able to model, and he was able to pinpoint that there was actually a productivity gain that was starting to happen because of computerization of businesses that kind of switched the paradigm on what should be happening with monetary policy. I don't remember if he was thinking about tightening or easing at the time. I'd have to sit and think about it. But the bottom line is that something materially happened because of computerization of the business sector. I think something kind of similar is happening there's something material happening that is starting to take hold, that is adding productivity, and this may be what breaks the old model of a natural unemployment of 5%. Maybe that paradigm is going to change. I don't know. We have to see. But there is this behavior of chasing this AI trend, and because of that, we're going to see an increase in equities. Now, Chairman Powell my understanding is Chairman Powell did say that he was not intending on bringing rates down anytime soon. Well, anytime soon to me sounds like way after 2025, that it's not in the cards that we're going to see this unless something materially changes in the banking sector or in the employment sector. What is interesting historically is that usually during an election year, we have a downturn in the economy. So, in 2024, we may actually see some sort of, downturn. So, we'll see. We don't know. We may see rates go up in 2025. The point here is that at least for the rest of 2023, we probably are going to see equities up, and we may actually see the beginnings of the first really soft landing that the Federal Reserve did. That's being very optimistic. Usually Federal Reserves over-tighten and the economy starts to falter. But this is a relatively very muted, engineered recession that the Federal Reserve was trying to have. I mean, they even stated that they were basically, trying to engineer a recession because they were saying that there was going to be pain in the market. Remember when they started first trying to raise the rates? So, but it didn't really happen. So there's something new that's taking place. That's the reason why I bring up Greenspan, and that there's something material changing in the overall dynamics of productivity, or how people spend, or how people view their particular conditions. Maybe the gig economy is part of it. Maybe people are moving more into a consulting kind of thing where they're doing, you know, multiple projects, or you know, I think people call it a side hustle kind of stuff. Maybe more people are doing that. I don't know. But something is changing, and that maybe it'll last, maybe it won't. I suspect that it will, and that the, you know, rates could continue to go up. But I think that it would be only if inflation is not controlled. And at this moment in time, it seems like inflation is controlled. Now, something that goes against that thesis is Saudi Arabia. If Saudi Arabia and OPEC continue to tighten their supply of oil, then there's going to be price pressure within the oil market because they're more tied with Brent. But with, you know, but this whole WTI and Brent ratio those prices will start to go up if they continue to tighten their supply of barrels of oil. So, you know, there's that international component with oil that could be a driver to tell the Federal Reserve to raise rates or not. So it's a multifactorial problem here. It's not so simple. Federal Reserve is just going to raise rates. You know, there's a lot of things that have to happen. You know, right now we can focus on, okay, this is June 2023, and, you know, what is it going to be like 3 months out and 6 months out? We'll probably see maybe 2 or 3 spikes in the VIX, a little bit of a correction in the equity market, and then we'll see additional flow of funds, because there's so much money on the sidelines, because we thought that we were going to see a recession that we didn't see, and this is going to keep the equity market buoyant for a little while, and then around probably once we test the high on the S&P 500 for a few months, then there'll probably be a little bit of a correction, maybe a 5% correction, and then another leg up. So we'll see. We'll see. It's possible that the Federal Reserve raises rates until 2025, but I have a feeling that they're going to raise one more this year, maybe 2, and pause for a while and see what happens. But it's very possible that the Federal Reserve wants to get to the 7%, 8% range. And if that's the case, then we'll probably be seeing rates going up in 2024 too. So it's a little bit of complicated, you know, situation. But now, now in terms of universal basic income, you know, this is I'm against universal basic income, because I think what's happening is there is that social contract is starting to break down in society, where people can't get jobs to be able to support their family, and that a socialistic system is coming in to, you know, to try to be a floor for universal basic income, and that in itself over time is inflationary and destabilizing and not very productive for the economy. Obviously we need to have safety nets for people that are unemployed, and maybe unemployment insurance should be extended. But universal basic income, I'm against. Now, this goes into the whole singularity stuff and artificial intelligence, if it takes jobs away, and there are more people being laid off, and you know, and opportunities aren't there for them to plug into to provide for their family, then the socialists will come in and say, well, this is our solution to it. And what will happen is that you're going to have this sea change. There's going to be the erosion of the middle class, and you're going to have the poor, and you're going to have the uber wealthy, and the erosion of the middle class. Now we're starting to get into you know, social engineering, and you know, there's a group of people out there. Some of them are very wealthy, and you know, some that have a lot of political power, that want to gut the middle class. And one of those means is get people dependent on the government, and then you will be more beholden to the government. And I think universal basic income, UBI, is one of those tools that the powerful are trying to use to get people more dependent on government. But if you take a look at any time in history in the United States, even the very first settlers that came to the United States, you could, America is half full and half empty, right? Those first settlers came and they barely survived because they didn't know the growing seasons. They weren't fully prepared. The attrition rate in terms of the death rate of these new settlers were extremely high. In terms of disease and in terms of famine. But there was this will to continue on, right? So this is kind of part of the whole ethos of the United States. It's always been rough, but perseverance, the grit of the American spirit prevailed. And that starts at the very moment of settling in the New World. So if you take any particular decade in the United States history, you will find that there was these times that were, the glass is half full or half empty, right? Sometimes even more empty than full. But the reality of the situation is we did persevere. So if we use that as the model of where the United States will be going into the future, the historical trend is that we figure a way. We don't know what that is. It's a complicated situation. It's very chaotic, and a solution will emerge. But there is an erosion of our middle class, but then society has feedback loops. And we may actually have a feedback loop that preserves the middle class. So it may not be all doom and gloom, but we also have a lot of problems too. Again, the glass is half full and half empty. We have a lot of social unrest that's taking place. We have a lot, not to get into all the details, but there's an erosion of the family unit. There's an erosion of religiousness. There's an erosion of decorum, within the public square. There's an erosion of social norms, and because of that, it's going to cause social disruption. And we have people that are trying to cause these types of social disruption, and make people divided and gut the middle class and have people more dependent on an Uber state. So there's a lot of problems, but we need to kind of go, what, America usually finds a way. All right, that's the American spirit, and let's try to be positive about this. But there is a case to be made that things can be gloomy, especially with the phrase, if someone loses their job, they're in a depression. But if someone that's your neighbor loses their job, you are in a recession. So it depends on perspective, right? And the idea here is that don't be. I think the reason why I'm doing these videos is really to try to convince people you don't have to be a victim of the situation. If you are in control of your own destiny, in terms of education, in terms of building different skill sets, enjoying different hobbies, you not being dependent on government or dependent on a corporation. Once you can check out and you are master of your own destiny, you don't have to be a victim of UBI or a victim of the Federal Reserve raising interest rates. See, the average citizen, I'm going to be very, very blunt on this. The average citizen is too dumb because they're too lazy. And once an individual realizes that they don't have to be a victim of the system, and that they can see patterns that are going on in the system, and they can benefit from it, then you are not a victim anymore. So instead of being a victim of UBI, instead of you being a victim of the Federal Reserve raising interest rates, like for example, if the Federal Reserve raises interest rates, your mortgage payment may be going up because you have a variable mortgage. Well, first of all, you should never have a variable mortgage, ever. You should never have a variable loan out, ever. No matter, because of this particular situation. Because when things like this happen, you will have less security in being able to absorb the shock with the increase in rates. You're better off paying a higher rate that's fixed. And because of the natural inflation, your income usually goes up, and you're paying with less dollars, so it kind of it all kind of evens out. So you should never have a variable mortgage, ever. It should be always fixed. And if the interest rates go down, then you can readjust to the lower rate fixed. But never have a variable mortgage, because when interest rates go up, now you're being adjusted to a higher payment. And a lot of times when that happens, there's so much shocks in the system that some sectors people lose their jobs. Well, how do you absorb that shock now? You're a victim. So right there is a perfect example. Don't be a victim of price shocks. But in terms of what I'm going over here, I'm showing you how to benefit from the Federal Reserve raising rates. So you're not a victim. And if you pay attention closely to what I'm saying, you will make more money doing what I'm telling you to do, or informing you on how the markets are moving, than any gain that you're going to get in some sort of bonus or some sort of raise that you're going to get from your employer. And now you're not a victim. When you're not a victim, you have power. So you don't have. So this is where the glass is half full. If people want to take charge of their own life and not be a victim of things, then then things are a little bit smoother for you. There's others that can't do that. There's others that won't do it. So, but the reality of the situation is that you wake up in the morning and you say, I'm not going to be a victim of this interest rate policy, or I'm not going to be a victim of this division that is taking place in the politics that is happening in your country. Because there are divisions, but you can benefit from this tumult and check out. This is kind of a prepper mentality, but you can still be integrated in society. Preppers have a tendency, I think, to think that the solution is that you have to plug out and not be a part of society. The real solution is that you don't have to be a victim of the movements in society, and you can still be integrated in society. So this is what the transnational capitalists have figured out over the centuries, and you just have to take a page from their playbook and realize that you don't have to be a victim. Now, there will be people that that will be victims because they decided to go on vacation instead of invest, not realizing that the future earnings that you are going to be making to be able to be able to not be a victim will be far more in a few years than any marginal gains that you might have from a raise or a bonus from your company that will eventually lay you off when you're too expensive. So don't be a victim. All right, that's the key of what I'm trying to do here. So I'm against UBI. I do think that there needs to be a safety net for individuals that do go through unemployment. I think that the unemployment compensation probably should be higher and should last longer, and especially should help with with retraining if individuals need to be retrained for different industries. That's how to solve it. It's not UBI. That's a socialistic perspective on gutting the middle class and making society less productive. And we don't want to turn into a welfare. That's basically the beginnings of a welfare state. Don't be a victim. That's my take on it. Now, yeah, that's about all the questions out there for me to really address. So thank you for listening. This is a live session, but this will be on the other channels once it's available. And hopefully you learned something, that I think that the equity market is a strong buy. There's going to be some volatility, right? But in the long term, when I say long term, within the 6 to 12 months, that's not really long term, but I mean that's really short term. But it's all based on perspective. But 6 to 12 months from now, I think you're going to look back and you're going to go, wow, that Paul was right, about the floor and the ceiling of the Fibonacci sequences that were taking place from 2019 and 2015, and we just broke the resistance point on that Fib sequence for both the 2015 and the 2019 Fibs. That is a very strong algorithmic trading buy, and money managers are chasing it now. And I think we have just seen the end of the bear market. Time will tell. Maybe I'm wrong, maybe I'm right, but I think I'm right. And not only that, I put a lot of money into the S&P 500 just recently. So thank you for listening. Please subscribe to all my channels. I have 3 channels on YouTube. All right. So click the link in the description. I'm not sure on the live version I still have to put the links in, but on the replay the links will be there. So click the link, and please subscribe to all my YouTube channels. I also have links in the description for Brighteon, Bitchute, and Rumble. Make sure that you have those subscribed, because there are certain things that I say that I can't keep on YouTube. I'm not going to bring it up, but you know what that is. And but it's important to continue the discussion as we evolve through 2023, 2024, 2025, right? I think those are important. So make sure you subscribe to all the channels. You can help by subscribing for a nominal fee on Patreon to help support my coverage of the news. And please go to my store, the-studio-reykjavik.com. Links are in the description, and you will be able to get health products that will get your body closer to homeostasis, get your body to heal, get your body to slow down its aging, and you're going to have more energy and more vitality. Some of the products I offer are like soaps. I have many different types of nano silver soaps of different scents. This one is peppermint, but I have a lot lemongrass and a lot of different scents. I have 2 different probiotics. This one is the tablet form, but I also have a powdered form. But getting a good probiotic and doing that every day will get your gut being able to process nutrients properly, be able to absorb nutrients properly, the metabolism of your body will improve, your energy will improve, and even your mental state will improve. There's a lot of research out there that talks about mental state and gut health. So I have a very good multivitamin that you can take a look at on the store. It's the-studio-reykjavik.com. And because we are now moving into, the summer season, and, there's pollen, and who knows what's going on with the dust from the fires from Quebec, I have these lozenges, silver lozenges. This one's in apple green, and I have another one in sweet menthol. And take this, for allergies, just in case you are starting to get that kind of like abrasive feeling in your throat, especially with the fires that were taking place with Quebec. But people have allergies these days, and having that lozenge it kind of soothes the throat, and you can kind of swallow some of those irritants. Now, I also have a very good toothpaste. This toothpaste is going to be the best toothpaste that you ever get. And this doesn't have any fluoride in it. This is using the structured nano silver technology. And what will happen is that this is neutralizing pathogens. It's whitening the teeth, right? And it doesn't have the fluoride, so it doesn't give you that toxicity problem. But this toothpaste will help with cardiovascular health. A lot of people don't realize that oral hygiene is a big component to cardiovascular health. And getting really good toothpaste and using it is a must, not just for proper dental health, but also cardiovascular health. So, and then I also have 2 different types of silver gel. Now, what's important with the silver gel is that it can help with abrasions. It'll help heal quicker, or cuts, scrapes. You can use it as skincare on your face, or on your body, as a daily routine. I couple this with collagen and my vitamin C and C60 and resveratrol, and that is my advanced skincare box that people can get. And the reason why that works is that the collagen helps to build the underlying layer of your skin, the dermal layer, right? But you have to take vitamin C and drink water, about 64 ounces of water daily, to be able to build that matrix, right? And this is topical, so you put this. So the vitamin C, the resveratrol, and the collagen help below the surface, and the silver is helping above the surface, neutralizing pathogens, tightening the skin, and healing some of the problem areas that may be inflamed in some way. So if you do that, you are able to improve your skin health if you're doing this on a regular basis. So I use this every day. You can get the collagen, put it in, I actually put the collagen in hummus. I have hummus every day for lunch. So I put the collagen in the hummus. It's a powder. It's a kind of a powder form. So just a cup, and then you put the collagen and mix it. The C60 is important because it's a strong antioxidant, and that will improve the lower level of your skin, because your upper level is more keratin, and people don't realize this, but we're kind of watertight, right? We have this. Our skin has different layers, and that the highest layer has the highest level of keratin. And as you get to the surface of the skin, the cells are actually dead, and then they flake off. So the lower you go, the more you get to the basal layer, that's where it's regenerated. That's where your adult stem cells are. So you want that basal layer to be as healthy as possible. The resveratrol gets rid of senescent cells, and it's a strong antioxidant, so it reduces the cellular stress. The C60, very strong antioxidant, reduces the cellular stress at the basal layer. Then you have the collagen and the vitamin C and the water and the topical to all work synergistically to improve your skin health. And you'll see over time this improve. You do this just for 7 days, and you'll see an improvement, and you'll see a larger improvement, in a 30-day window. But the key is to continue this on, because it's not just the skin that you'll start seeing that this is improving. It's also improving your different joints in your body. Like knee, people sometimes have knee problems, especially when they get older, or hip problems, or problems with their joints that are in their hand. They may get a little bit of arthritis or something. And this is helping with that cartilage and tendons and ligaments, right, over a longer period of time. To heal those kinds of things takes a much longer period of time because the regeneration rate is much slower. But the skin, it regenerates at a pretty high mitotic level. So because of that, you'll see skin improvements quicker than the joint. But over time, you'll start seeing that your recovery times are better if you're working out, and some of these other aging ailments start to improve when you follow this over many months, if not years. So that's just a few of the products that I have on the store. Please go to the store, the-studio-reykjavik.com. Use the discount code to help with the shipping. It's discount, all caps, discount 5. You get $5 off on any order. And that's how I can help you be able to get the products that you need to improve your health and to increase this. You'll see in the news that there's these words like longevity, anti-aging, reverse aging, things that are starting to pop up in the news. I've been doing this for a very, very long time, multiple years. I actually started the whole antioxidant regimen going all the way back when I was 16 years old. I'm a lot older than 16 now. So if you do this on a regular basis, you're going to see improvements in your health, and that's the key. Again, don't be a victim. We're bombarded by GMOs and processed foods and all this, and pollution and stress in the environment. Don't be a victim. Don't be a victim. Don't be a victim from interest rates. Don't be a victim on what you eat. Right? You can change your particular situation by taking control of your life. And you don't have to be a prepper. You don't have to plug out and just be, live in some sort of remote area of the world. You can still be a part of society. Just don't be a victim. Be in control of your own destiny. That is, I think, the key here. So thank you for listening. Please subscribe to all the channels. Please go to the store, the-studio-reykjavik.com, and have a nice day.